Hey, what's going on, guys? So we're going to do a little review over the week. This was OPEX week, so there's always going to be a time and place where things start to sell, right? Distribution and redistribution are a process, while the bottoming part of the chart would be more of an event, right? So when you have a distribution, obviously there's things that need to tie into the redistribution being able to take place, right? And we had a few areas that were on the focus for NVIDIA on this chart to be able to catch the downside, right? But it was very, very tough because one, we were basically getting like the squeeze trend higher ever since reclaiming this previous support from over here, right? Which led to shorts obviously underwater after this resistance off of the gap now being claimed and based was obviously very, very clear as now a true support here and then a rally back to the upside to fill the entirety of the gap. However, what happened was we had OPEX right here today on Friday. Today's February 21st, right? So that's February OPEX, and what we did was we filled the gap on OPEX week, right? So we filled the gap. There was really no true volume anywhere throughout this trading area and this whole entire leg higher back to the upside. And we figured we might have already had our UTAD put in place in the distribution schematic, right? And tech was relatively propped throughout most of these 3 days of action here, right? So Tuesday all the way through Wednesday and Thursday for NVIDIA, it filled the gap technically. It was also beneath this previous preliminary level of distribution over here from June, right? But we just never got to sell, right? So that doesn't invalidate the fact that, there could be redistribution and potential off of this gap, and that's why I was watching the actual gap fill level. Okay, so we filled the gap fill. It's basically just looking for lower highs that are respecting structure based off of this candle, right? So very important candle right here, obviously a gap fill. We also have an NWOG. Here's the Friday close into the Monday open, right? So you're taking the opening print of the week, which is now the new week opening gap. And we took shorts off of here today. So that was a really, really nice trade right off the bottom of the NWOG. This is where I previously was short NVIDIA over here and a few times over here. I actually shorted this thing 3 times for a base hit every time. And then these over here ran 110% today on 2 weeks out. So that was really nice. And basically the signal that was really being brought to my attention here was the illiquid sectors that were selling off a little bit quicker rather than like tech. And the whole entire chain from the OPEX is basically what was holding up tech throughout most of these rallies back to the upside from their previous distributive states, right? I mean, like you have Apple over here, you had NVIDIA as your two main distribution looks, and then obviously you have Tesla, and then you have some other ones like Microsoft here now that are pushing lows of support here with a very weak look, right? But essentially all these really were, guys, were pops to fade. And then you're obviously starting to get some of the other Mag 7 rolling over as well now. So that's why we had a very, very, very gross looking candle here today within the NASDAQ. Not as bad in the S&P, however, when you're looking at this from a higher high distribution perspective, this is just simply put a new high. And that new high is a failure to base the previous old highs of support. And then what happens is speed kicks up in the tape once that becomes a quote unquote breakout failure for the time being, right? So we'll go over to the sectors here real quick. We'll take a look at these. GS was completely and totally dying over here. If you guys take a look at this candle here, that is a big time volume increase as well as almost minus 4% on the underlying. If you guys go over to XLF, we had a really disgusting candle here above this previous high territory. And then you go to some of these other names, and there was a few other shorts that I took this week. One of those being actually right here on Schwab. So what this was the earnings candle high, being an area of a solid risk tolerance to be able to obviously risk like a short side trade off of. If you guys go to the weekly on this chart, it looks like a higher high distribution that's taking place here. I mean, if we take a look at the volume profile, you're getting a lot of volume at a lot of these highs, right? So there's the volume at that high, volume at this high, followed by a sell. The decent volume behind this high, not anything too crazy, right? And then you get really big volume on the lower high. They base it for multiple weeks on end off of this previous weekly support. They push it higher again, and then you get increased volume sell off, and then you're getting another lower high where there's really not a lot of volume off of that lower high. And now we're pushing up one more time, and we're getting record high volume that we've seen. Meaning like, you're getting your fourth higher high of distribution, all within the previous range over here. And if you guys go into the daily chart, you could see how the amounts of volume on this breakout failure, essentially on this wick right here, is very large. And if you guys go into the hourly chart, you'll be able to see how there was a lot of volume actually leading up into that level, followed by a big time sweep with a lot of volume, and then subsequently what we did was sell off pretty far. And we've never really seen a strong buyer. We just saw lower volume inside bars, and then we started to see banks dying off and selling. And we've successfully closed daily candles here now beneath this gap progress range here. So very, very fantastic area that is now lost here on the daily chart, as well as these supports here as well. I think this chart looks fantastic to then revisit these lows and eventually reach into this gap, right? So I think that this is a fantastic chart. I think this can be a fantastic trade here. We still have a lot of these daily lows of supports around here, around 80, sub 80, just around that general area to take out. And if we sweep 80, that would be a good place to cover as well. But yeah, Schwab is a fantastic trade. If you guys are looking at the hourly chart, very easy, lower highs on the hourly if you're taking swing low, swing high. Looking at above discounted areas to obviously execute off of. And this has just been a very, very, very easy looking chart here for the time being as far as a short side trade goes. So yeah, the bank sector was really telling us some things about this area of the market and how the illiquid sectors are going to give you a little bit of a sign before tech does. And this chain was very big for tech, and now we're starting to get a lot of these UTAD looks in a lot of areas of the market, right? And if you guys go over to the equity market, and just your general tech equity, I mean, you could take a look and just see how a lot of these charts really don't look too good, right? A lot of them don't really look the best right now. So with that being said, Mag 7's kind of playing out how I have exactly expected it to play out, right? We go over to Mags. We could see how this was a really, really big, disgusting breach of the trend line, followed by a big failure now in a daily range of support, right? So basically, we have a huge week for next week. As of right now, things don't really look too good, and we'll see what goes on. But now we'll go over into some of the other swing trades. Oxy was a flush trade. Don't even really have to explain this one other than flat report. And what this did was it was getting back above like this daily level over here. Okay. And basically above all of this resistance that was initially created into the report. So I was basically identifying this down here as potential higher low in like the weekly, right? And then eventually a rally back to the upside. So I sized immediately into some calls, and then I bought the pullbacks on the 618s, scaled some into the new highs, held some overnight, had about 1/3 of my position or 2/3 of my position left. And then what happened was we never caught on to any sort of level. So I cut the rest of the position. If we go over to Velo now, Velo is another one of those energy names that I really like, but you have to be very lenient with how you're kind of trading these ones, just because you don't necessarily know where the continuation is going to base from. There's no clear sign of momentum happening here just yet. I just really like the reaccumulation range that we potentially have. And I was taking ads on this one on this day right here. And then as well as this day, this was just starters over here for me and shares. And then over here, I started some swings towards the lows of the range. And then I started to buy the dip on the Wednesday inside bar. That's whenever I thought everything was ready to go. And as you guys can see here, this higher low looked really fantastic for a continuation. And then we just never got above that weekly resistance around this area, right around here. And now we're bleeding back lower once again. So this is going to be a top watch for me on ads into the swing that I have already with Valero. I'm not heavy sized over there just yet, but that was a really, really nice chart that I still will be eyeing up here into next week. And yeah, so we'll go over into some of the other ones here now. TSM, fantastic looking chart here. Really weak. I don't really see any reason as to why this one will not sell off even further. It's kind of the similar schematic that I was talking about with Schwab. It's a little bit different here on the weekly, but you could see the volume profile with the amount of volume at these highs. That followed by consolidations, and those consolidations are followed by higher lows, and the higher lows do not have a lot of supportive volume behind them. And the new highs of distribution have a lot of volume, right? And the trend really starts to stall out as those new highs get distributed, right? And then you get your higher lows followed by your trends higher, really low volume, weaker trend on the way higher, followed by a lot of volume at the new highs, right? And then you consolidate on a record high volume peg. You go for the breakout, and then you get a two higher high distribution from here to here, right? And then we get a gap down on record high volume, right, with a 13% correction on the underlying itself. So subsequently, what we got to that was obviously lower highs off of the breakout failure level, as well as into this bear gap. And now this one has been a very relatively weak name. I've just been sitting in some April puts for now. Really, really nice, easygoing trade here with really no stress involved. Basically, was a very easy pop to fade, and I faded that for a day trade as well. Last week, but this was just a fantastic area to start thinking about scaling into some shorts if they wanted to sell off the news. So I day traded that this week, and as you guys can see, what happened was they filled the gap and everything got exhausted, and they pushed it all the way back lower, now sub 200. And basically what I'd be looking here for this chart here, guys, would just essentially be for this daily support to be lost. Obviously, this low down here is essentially where the gap open is, right? So I could see exactly as to why we actually bounced here and then closed above, and we could see a little bit of a pop higher, but I would rather have that because I want to build a very big position with this one. It just looks like the phase D of distribution playing out, and nothing really looks too good here. I think this one's going to see probably sub 187, probably into the mid 180s, I would believe, or at least just 190. Nothing really looks too good here. We obviously have some catalysts in mind that can catalyze the whole ending phases of the distribution just through like tariffs and whatnot. So those have not been announced yet, and we'll see how those do. But yeah, that is TSM. It's a short side trade that I've been eyeing up for a very long time. So aside from that, guys, there wasn't really anything else on the week that I absolutely loved. Everything else was just really easygoing, small stabs here at the tech short. I caught decent leeway on some puts a couple times, and those ended up stopping, or I scaled some and the rest just stopped, right? But essentially, all I really said here the whole entire time with the schematic was this can technically go fill the gap, right? All the way up here would be the gap fill, 142.37, 142.62, and that's exactly where it pushed. And now we're getting subsequent lower highs afterwards beneath the June level, as well as beneath the high that actually filled the gap, right? So these were all easy charts around these areas, right? Very, very easy. And then everything else has been almost in no man's land. Couple dip buy opportunities I'm looking at. Maybe one being Google, not really too sure yet. Potentially MU. But aside from that, guys, wasn't really too easy of a week, right? There was some parabolic shorts. There was some decent looking trades on that side of things with like PLTR and what was the other one? Hems. Hems was another really fantastic one, but I'm not really too interested in that right now, just because the market's really hard and difficult, and I don't really want to be positioned in a very high risk parabolic short setup. And I already see a lot of the setups really playing out here. And as far as like if we were to recorrect on tech, maybe see some relative strength in some of these different names that have been seeing the money rotated towards from dispersion out of the Mag 7 into some of these names like LRCX and MU. Those are fantastic looking charts, as well as plenty others out there. So yeah, really nice, much needed correction here today within the markets. Hopefully we could pull back into some of these gaps. Hopefully the NASDAQ could recorrect down into like 508. or 505, I'm sorry. And then eventually into 492. That would be fantastic for then obviously a long throughout the summer, and then potentially another short for continuous distribution. If we were to get a steep correction here soon, maybe that would end. So it's basically all I'm really looking at. As of right now, the distribution thesis still makes sense. I've been bearish on this market since December OPEX, so we're basically still trading within those ranges. So nothing really is changing for me here. Like I said, we never got a true UTAD within the indexes, and we have maybe officially got that just through the February chain of OPEX, right? Nothing's ever random as far as accumulations and distributions go, springs and UTADs, right? So potentially we have a UTAD here to keep in mind about. So yeah, if you guys have any questions, feel free to DM me. I'm probably going to be taking a little bit of a break here, other than maybe a few high confidence trades I have on the short side. And then I'm primarily going to be prepared for the long side here as I see a lot of these schematics playing out and giving off really clean opportunity once this distribution is fully out and fully completed, and we can really dial in on the names that have been building out the accumulative looking bases, but just haven't had those markup phases yet, or the LPS, or the break of the creek. So going to be a ton of opportunity this year. Just stay tuned.